Welcome to NYSE Euronext's monthly regulatory update. My name is Mark MacGann and I'd like to present to you some of the latest developments in the MiFID review process. Under the Danish presidency, work continues at the technical level, and the Danes would like to publish a progress report by the end of their presidency at the end of this month, while the Cypriot presidency, which takes over on July 1st, has the ambition to publish a general approach towards the end of the year, meaning that they will take the talks to a more political level. Meanwhile, following a second exchange of views in the European Parliament, MEPs in the Econ Committee have tabled over 2,000 amendments to the MiFID directive and the MiFID regulation. They will discuss these amendments on the 19th of June. In parallel, the rapporteur Markus Ferber has begun discussions with his counterparts in the other political parties, the so-called shadow rapporteurs, with a view to finding compromises on the many complex issues. The deadline for a vote in the committee is still July the 9th, although many are speculating that this will be hard to maintain given the diverging views on the amendments that have been tabled. The current state of play on some of the more complex issues includes market structure, clearing, and high-frequency trading. Now, on market structure, the most controversial issue is the new OTF category, Organised Trade Facility, which has been proposed by the European Commission. In the package of amendments, we have seen those MEPs on one end who wish to delete this category, who see no need for another category within MiFID, and those on the other end who want to have this category for all asset classes and include the possibility to trade proprietary capital. So the rapporteur is going to have a tough job to try and find a compromise between these radically diverging views. On a more positive note, there seems to be a majority of MEPs within Econ that accept the need to properly define over-the-counter trading within the text of the legislation, and this is certainly a positive development from our perspective. Within this new package of amendments, we have also seen a move to question the European Commission's proposals for open access to clearing. MEPs from the three largest groups in the European Parliament are proposing to delete the Commission's proposals, Articles 28 and 29 of the MiFID legislation. Other amendments have been tabled in order to soften the Commission's proposals so as to minimize their potential impact on European market infrastructures. On the controversial issue of high-frequency trading, numerous amendments have been tabled with very diverging views on issues such as minimum resting times, tick sizes, sponsored access, and order-to-trade ratios. Some of the previous confusing or even abstract statements that were made during the process have now been clarified into proper legislative proposals in the amendments. Rapporteur Markus Ferber will now need to work on an efficient solution, drawing upon the numerous tools that have been put on the table in order to tackle this complex policy objective. Altogether, even if the committee vote were to be delayed, the European Parliament is further advanced in the legislative process on MiFID than its counterpart in the European Council. If you have any questions on MiFID or any other regulatory issue, please don't hesitate to contact me or one of the team. Thank you.